All right, before I say anything, I want to go ahead and preface everything with the fact that I am not an economic advisor at all. Yeah, you guys might be hearing this a lot during these GameStop days, but yeah, I'm not an economic advisor. I'm a government student in college. So yeah, just take everything I say with a grain of salt, and let's get right into it. So obviously, but now you guys have probably heard about the whole GameStop shenanigans. It's very interesting to say the least. Uh, Basically TLDR if you don't understand what's going on. Quick analogy. Think of a monkey, right? Monkey as a banana, and a snake comes by and asks the monkey to borrow his banana. Monkey says, "Sure, why not?" So then the snake goes and sells the banana at $5, thinking that the banana is gonna go down to $4. And so he sells the banana. A week later, Snake comes back. He buys a banana at a lower price and then sells the banana back to the monkey, making $1 in profit. And so, as it turns out, this is what companies have been doing to GameStop, right? And by doing this, they've been ruining GameStop worse than it already is. Don't get me wrong. I still believe that GameStop is a dead model, has a dead model for business. Obviously, nowadays, malls and stores like GameStop don't really stand up to Amazon and other online platforms like Steam and you can say Microsoft, you can say PlayStation. And so once Wall Street Bets, a Reddit platform, realized that this was going on, they realized that if all the monkeys got together, right, and they brought every banana in the market or most bananas in the market, that would force the demand up. And obviously, the snake still needs to pay back the banana, so the price of the banana goes up because the demand of the banana goes up. So in this interview, honestly, I don't even know the guy's name, but he's from the Shepard Smith show on CNBC. He interviews Vlad Tenev, the CEO of Robinhood, and honestly, this interview, I think this interviewer is really good. He doesn't really seem to side with Vlad in all of his questions, and his questions are pretty straightforward. If you ask me. However, Vlad is just completely like evades the questions, doesn't even answer. I think maybe answers. And so all of these questions are prefaced here.
And as Melissa just said, there are, frankly, as you know, a lot of angry customers out there and a lot of questions about what took place and the decisions that you made to limit so many of your customers' ability to buy stocks like GameStop. Questions about whether you have a liquidity problem, whether you're trying to protect them from themselves, whether Citadel did this. Explain what happened today.
Okay, and so here the host lays down or his three main questions for the interview. He first lays down the question of liquidity. In order for Robinhood to buy a stock, they obviously need to have the money available to obviously purchase the stock from the New York Stock Exchange. If they don't have liquidity available for it, or if they're not able to have money available for people that are trying to withdraw, they're gonna close the stock trading.
Andrew. So what happened today was, as you pointed out, we had to make a very difficult decision. It's been a challenging day. We made the decision in the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them, and they could also trade in the thousands of other securities on our platform. So it was a difficult decision, and that's what we had to do as part of normal operations.
But explain then, why did you do this? Did the SEC call you and tell you you had to do this? Was there a problem inside the company in terms of liquidity, in terms of the amount of deposits that you had to put it in front to the exchanges? What led to this?
So the host really like just calls bullshit on this guy already. You can see that. Oh my God, yeah, Vlad Tenev just immediately tries to dodge the questions. Not only that, he goes out there, right, and makes it obvious that uh it was were the stocks AMC, GME, Nokia, some other stocks were still available to be sold. So not only does he evade the question, right, and the host that has to come back and state the question once again because Vlad just wants to go off rail, right? He has to come out there and say himself, we're also allowing people to sell, we're just not letting them buy. And honestly, Vlad Tenev repeating the fact that people are still allowed to sell and just not buy kind of took me off guard. He really doubled down on his idea that they're not trying to control they're not trying to manipulate the stock market. Um, so yeah, that really took me off guard when I was watching it online. I thought he was just gonna try to evade the fact that they were still selling and just not buying. However, I mean, basically him and the whole company just doubled down on their idea. They're not trying to manipulate the stock market.
Sure, and let me explain exactly how this works. First of all, I want to address some of the misinformation that's been out there because there's a lot of it. We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants. The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets. And they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, again,
It
this
sounds
wasn't. Go ahead.
but it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
And so Vlad Tenev, in this next part of the interview, he goes on to preface the fact that he is not funded or was not pushed to this decision to shut down trading by Citadel, but instead argues that this is just uh, SEC trading guidelines that he needed to basically comply with. So when I saw this live, I instantly thought to myself, perhaps this is because they have paperwork that needs to be dealt with as they're filling out every exchange of stocks. And at first I thought fair. However, as the interview pushes out afterwards, this sounds like a liquidity problem. Obviously, liquidity is the availability of a company to be able to pay out its debts. So I don't know if you guys know this, but when you cash into Robinhood, uh, Robinhood doesn't get the money instantly. It takes them a couple of days for the money to come through, and so honestly, it sounded to me like a liquidity problem.
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions in the morning.
And so basically, Vlad kind of doubles down once again in this part of the interview. He states again that there was no liquidity problem, and that people were still able to cash out. However, this is where my problem pulls up. If there was no liquidity problem, right, and there was then there was basically no reason to stop trading, right? And if there was a reason to stop trading, let's say to do SEC paperwork, then perhaps you needed to stop the whole trade. And so my problem here is that once I looked up SEC regular capital requirements for brokers and dealers, obviously I don't understand none of the mumbo jumbo. But what it does sound like, it sounds like a bunch of bullshit. If there was SEC requirements that needed to be filled out, obviously Robinhood went about it the wrong way. Stopping stock trading on just GME, Nokia, and AMC just seems like they were trying to bail out Capital, Melvin, and Citadel. And so I'm not saying that Vlad is necessarily lying here. It just seems like the wrong approach, and perhaps in the whole scheme of things, afterwards, Vlad maybe realizes this, but it doesn't seem like the right approach, especially when you have a mob of angry people already mad that you're basically being bailed out.
But also, you might have seen Robinhood has been the number one app in the App Store overall. So we have seen unprecedented interest due to the fact that finance has been culturally relevant in a way that hasn't been before, and these stocks are going viral on social media. And I think it's really interesting to juxtapose against some of the other questions that we've been having before this. Of course, Robinhood stands for everyday investors. From the very beginning, we have stood for investors, opening up access and giving them the ability to trade commission free in whatever they want. And we've gotten a lot of criticism that, maybe there should be more restrictions. So it pains us to have had to impose these restrictions, and we're going to do what we can to enable trading in these stocks as soon as we can.
But what do you tell the Robinhood investor who says, "Look at the screen. I'm losing money. You are not allowing me to buy this, and by the way, I'm going to have to sell it for less money because of what you did"?
Well, to be clear, we're not allowing people to buy it, but they can sell positions that they have.
And so this is the dumbest bit of the interview. Vlad, I don't know what the fuck he was thinking. But he proceeds to what I think is basically a small flex, to say the least. He says, "Oh yeah, we're number one. We're the number one app right now in the App Store." And so obviously it had nothing to do with what he was asking. Obviously, yeah, being number one brings a lot of people into your app. But if you already said that liquidity is not the problem, then what the fuck does that have to do with anything? And so here's my biggest problem with the interview. As he tries to explain everything in the interview, he proceeds to try to take the basically be the good guy. And so he talks about how Robinhood has been judged as a company that gives too much access to the small guy, right? And giving them basically availability into the stock market and finances. And so that's really my problem. He tries to take the side of the good side, right? Be the good guy here, but in my opinion, he just comes off as a douche. And so the host once again calls him out for basically getting out of track and trying to hide his own skin. And again, props to the host. Good stuff, man. I love it. And so here's my problem with what happened today. As Robinhood, now let me be clear. Sorry, Robinhood is not the only company that did this. Webull, TD Ameritrade, other big companies. I think Schwab did this as well. I think that's what they're called. Um, they all stopped trading on GME, AMC, and other companies. And so, as these companies stopped allowing people to buy stocks, they allowed, I mean, Robinhood, not Robinhood, sorry, the big hedge funds still had availability to the stock market. And so, as most people saw the fact that they couldn't buy, they can only sell now, they started freaking out. They paper handed their stocks and just sold at a loss. I feel like a lot of people did. Obviously, like regular people that are not into the stock market and stuff, because I mean, I'd be freaking out too if I was losing a couple K. And so these big hedge funds took advantage of that and cashed out heavy. I can only imagine how many stocks they really cashed out on because they still, again, from the earlier example, they still owe the monkeys that let them borrow the stocks. And so this is probably this is not going to make hedge funds money. Let's get that straight. This is not going to make hedge funds any more money. This is just going to allow them to not go broke, like heavy broke. But however, there are reports, which I don't know if they are true, on Twitter and Reddit that a lot of these big hedge funds have been further shorting GameStop. And if this is true and it comes out to be true, I can see a lot of years of jail for these people. Obviously, with Robinhood making what's it called demand go down because people can't buy stocks anymore, and only allowing them to sell, you basically give a lot of supply to the stock market. There's not a lot of demand, so the price goes down. And so these big hedges were getting basically an easy shorting. To put it in simpler terms, think of the snake, right? Let's say that the snake borrows 40 bananas from Monkey, right? Now that the monkeys got together, right, and decided to buy all the bananas, Snake goes to the polar bear and says, "Hey, polar bear, you mind stopping these people from buying any more bananas?" And so as these people start not be able to buy bananas, they start selling them instead. And because they start selling them, the price goes down, and the snake is able to buy back the bananas that he was able to that he lended from the.
Um, and I feel a little bit. I know how Clorox and Lysol felt in the pandemic when they were running out of hand sanitizer and supplies. We just haven't seen this level of concentrated interest market wide in a small number of names before. So we understand our customers are upset. We're doing what we can to re-enable buying in these names, and we stand with our customers. We stand for the everyday investor, and we do believe that you should be able to buy and sell the stocks that you want to, subject to all requirements. And that's what that's what we're working day in and day out to make possible.
What do you say to the customer who says, look, maybe I shouldn't be on Robinhood anymore? If they're going to not, if they're going to shut me out right when I need to be on the service, maybe I should go to an alternative service.
And so here's another key part before I go on to the next part. Today there was a lawsuit in New York, South New York, filed against Robinhood. And what I see from what I heard from the interview, or from the interview, sorry, from the a couple videos explaining the lawsuit, it seems as the main point of this lawsuit is saying that Robinhood never specified that they would be able to stop the trading of a single stock or a lot of stocks like that. And so Vlad here proceeds to say subject to all requirements when he talks about being able to trade whatever stock you want at whatever time you want. And so this only seems to me like another douchey move. Now, I don't know. It might happen, it might not, but I believe that maybe by the time this video goes up, there will be a new Robinhood terms of services, uh, and like basically the thing you sign up to, you agree to when you sign up. And so, yeah, I wouldn't be surprised if there's a lot of new terms of services. That is the main reason that they're being sued. The host then proceeds to ask Vlad, what happens when all these people decide that they don't really want to use your service anymore? And honestly, man, this is just obvious to me. If you guys don't like Robinhood, I mean, honestly, I've never used Robinhood. Like I said, I was planning to move out of Webull after they pulled that crap where you couldn't trade with GME and AMC anymore. If you don't like a service, you don't have to use it. These people make money out of our data, right? They make money out of how much stock we're buying. They have no commission, but they do gather our data and sell it off to a bunch of other companies. So if you don't like the CEO of a company, if you don't like the way they're moving things, if you don't like a company overall, you're not forced to use it, right? There's a bunch of other websites you can use that are available out there. I wouldn't recommend Webull just because of the crap they did, but there are a bunch of other websites. And so I feel like this is one of those things that are constantly forgotten in American markets, not only stock market, just everyday life. If you don't like a company, do not buy it. It's that simple, right? There are usually other alternatives unless they have a monopoly on them. Um, but there are usually other alternatives out there.
Look, we realize customers are upset with this. It was not an easy decision. Ultimately, the team made the correct decision here. So what we can do is move forward, focus on giving customers the most stable and reliable platform going forward. And we've invested a lot in that, and we've actually seen some great progress, and taking all the steps we can to make sure customers can buy the securities that they want to buy without restrictions in the future.
When you look at the trading in these stocks over the past several days, do you think they're divorced from reality? Are you concerned that the investors that are involved in this are doing these things for reasons that they fully understand and they fully understand the risks involved?
And so once again, it comes up the question, right? What was the stopping of trading for it? Was it, just the unavailability of liquidity, or was it paperwork? What was it? And so what I get from this is Vlad basically saying, yeah, we're trying to make the platform more stable, right? Just trying to make sure people are able to trade. However, again, from what I see, it doesn't seem like it. I mean, the platform wasn't unstable. Everything else worked. right? Robinhood, I don't use it, but from people I know that use it, they told me everything else worked. And so again, that's the problem. If it wasn't about liquidity, then it was about SEC. But if it's about SEC, why didn't you shut down all platforms? Why didn't you shut down all trading in your platform? And so then the host does something really cheeky here. I mean, that's like the best way I can think about describing it. He was very cheeky, and he goes out of his way to basically try to frame Vlad as a bad person. Again, I'm not really taking a stance on all this. I'm just posing up questions that could be within the interview. So he asked him, do you think these people are basically they understand the liability of what's going on and how they can lose their money?
Look, when I'm obviously a big believer in more education. I want to make sure that we give customers all the tools and educational resources that we could possibly give them. This is really about access, and access is something I've been super strong about from the very beginning. In the face of a lot of criticism and questions about whether we should be granting people access in the first place. So yes, I think people need to be informed. They need to be educated. We do want to give them the ability to do that, but I also believe that access is a very powerful thing. The more individual investors have access to the markets, the better off we will be. And we're going to work tirelessly day in and day out to make sure customers have that access. It's in the name. It's everything we stand for.
Vlad, can you?
And so once again, from what I see from the interview, I'm not a speech master or anything, right? I'm not really good at speeches or understand what goes into making a speech or answering questions live like this. However, he didn't answer the question. He didn't state on what he thinks. If people understand that their stocks are or their money is liable to be lost, right, in all this trading. And so, once again, he really evades the question, man. He literally did not answer the question. Just tries to again make the company himself be the good guy in the story, right? Saying they provide information to everyday people and availability to stock markets. And to be honest, I'll be honest with you guys, what Robinhood does is not unique, right? Webull does it, TD Ameritrade does it. Um, Obviously, I'm not supporting all these companies. However, it's not special, man. Anyone can do it. Nowadays, you don't need a broker. You don't need a brokerage. So yeah, but there's so many brokerage in the stock market. Um, that I mean you got like 30, 40 to choose from. So Robinhood ain't nothing special. There's research out there. People got computers. People can do their own stock research. Robinhood ain't doing nothing special.
Walk
Let me
us.
bring Melissa in.
Yeah, Andrew, thank you. And Vlad, thanks for being on CNBC. Can you walk us through the moment in which you realized that you needed to do this in order to have the capital? I mean, you drew on credit lines. We've confirmed that, and you can confirm that to us directly. Um, at what point did you say, the options volume is just crazy, the stock volume is crazy, and we need to do this? It sounds like something you should have been able to figure out prior to today.
And so the female host here goes ahead and calls out on this guy. Why did you stop trading today, right? If obviously CNBC knew that Robinhood did draw on the credit line, which means that they had to hit up their credit for money in order to either pay out to the New York exchange market or pay out to people cashing out. Uh, I mean, if you knew that you were gonna come up to this, why not, stop trading yesterday? Why not do this earlier?
Well, it's interesting because I don't remember a time in the past where social media and the financial system have intersected in such a direct way. So things can go viral on social media, and that can lead to virality in the financial markets. Like I mentioned before, Robinhood's been number one on the App Store for the last several days, and we've never been number one on the App Store before. So I don't think anyone could have anticipated that this would happen. And in terms of the credit lines, you mentioned that was really a proactive measure. As I mentioned earlier in the conversation, the deposit requirements that we have at the various clearinghouses govern how much we can allow customers to buy some of these stocks. So obviously, in line with our mission and what we want to do, we want to put ourselves in a position to allow our customers to be as unrestricted as possible in accordance with the requirements and the regulations. So we pulled those credit lines so that we could maximize within reason the funds we have to deposit at the clearinghouses.
And so once again, Vlad here just basically triples down and says, yeah, we did draw on the credit lines, right? Because we needed to have the money available for our customers, right? And so that we were able to buy and they're able to sell. However, this again, this doesn't explain anything, right? If you do have a problem with liquidity, why did he not close out all the sales, right? If you don't have a problem with the liquidity, and you have a problem with the SEC, once again, why didn't you close out all sales, right? Take a minute, take a breather, make sure your company's able to run it and everything. But no, they just decided to close out those certain stocks. And so once again, I mean that's basically the end of the interview. Once again, I am not an econ advisor. I'm not an econ major. I'm a government major, and so just take everything I said with a grain of salt. All of this is just either speculation or just analysis, my own analysis of the situation. If you do find this video helpful, there is a little bit more of interview left. I will leave it at the end. But if you did find this helpful, and you want any more like government talk, econ talk, I'll be down to do it. So just let me know.
Final question, and we only really have 30 seconds at this point, and we will continue this conversation on Squawk Box tomorrow. But the question I would ask you is, you said you're going to start allowing buying tomorrow. What happens if it triggers whatever system triggered today where you had to stop it? Are you anticipating that? Are you doing anything ahead of that prospect?
Yeah, we're doing a lot of things. You know, we want to obviously allow buying safely for the firm and for the customers. And the teams have been working very, very hard. They were already working very hard dealing with the unprecedented, volumes and the equity volumes and the unique situation we've been in. So we want to do that safely. We want to be clear in the communications. And I own that, we should have been out there a little bit sooner. The team's been working very hard. People are doing what they can for our customers, and I'm very proud of the work that the team is doing and has done.
Vlad, we appreciate you joining us. We will continue this conversation, and we will air more of it tomorrow morning on Squawk Box. But again, we thank you.
I appreciate you having me. Thank you again.
Of course.